Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are talking about with respect to commodities, financial topics, and or wealth building topics. I'm going to sprinkle in a bunch of my opinions as we go through it. And if you need any help with anything, check out finding-value.com. We do have a discount going on. It's Turkey, and it's in the description link below. So let's dive in, and I will sprinkle in my financial opinions as we go. So here we go. If you want to follow me, it's at finding_finance. If you want to join our community, it is finding-value.com. So Grady says, Palladium, yes, that's an absolutely picture-perfect 2-year bullish falling wedge with massive volume coming in. As said for 3.5 years now, the ongoing commodities bull is a lifetime opportunity. So here's Palladium, the 2-year daily chart in a big falling wedge. Let me put that over just a teeny bit. There we go. Look at the volume on that bar there, guys. Big volume. And generally what occurs is you get these falling wedges. A falling wedge is basically the buyers equaling the sellers. And it wedges into a corner where you get strong selling pressure in the beginning, less selling pressure in the middle, less selling pressure. You can see that each selling pressure move lower is moving downward less. And then there's usually like an end of trend, false breakout, washout move at the end. So volume's coming, it's kicking in on in. And I do think Palladium, if you take a bigger picture view than just this, is doing a retest on a massive, massive big picture view. So Palladium's looking a little bit better. We've got Scott here. He said uranium to gold ratio, why I prefer uranium right now. And uranium is coming on up, outperforming gold. It looks fantastic. We've got, are we going to see poor returns ahead? And this is the S&P 500 industrial production divided by unemployment level. It looks like each time we hit this trend line almost, that we usually go lower over time. One of those times, well, actually multiples of these times, you can see 1968 all the way till 1981. That was a commodity bull market here. Then you could see as well here in 1999 to 2008, well, that was another commodity bull market. And this is also showing us that we are basically at the beginning of this commodity bull market. We're also seeing all these falling wedges right in the corners. So if we have all these falling wedges in the corners and we have the industrial production employment at the beginning of each of these commodity bull markets, everything's in alignment here, guys, for the beginning of a commodity bull market. Calvin says, this is why most people lose money in commodities. The stock price is at a high when the free cash flow is. Their free cash flow is also at 5 years low, though, not a buy for me. And this is, he's talking about SBSW, Siboney, and he's completely right. Your cash flows are crap at the bottom, and they improve as the bull market goes underway. I tend to believe that this bull market's going to be bigger than other bull markets. I think we have larger imbalances, and I think the companies will have free cash flow positive returns for longer. That's my, at least my proclivity, my guess of what's coming. Current weakness may be a great opportunity. AECO is natural gas up in Canada. This is the futures pricing for AECO. You can see that we are pretty low here in 2024, and you can see a big move on up, moving out into the future. Could be an opportunity. Willem Middlecoop says the miners breakout day. We've got the junior gold miners ETF breaking to the upside. We've got the global silver miners ETF breaking its downtrend line. We've got the copper miners ETF breaking their downtrend line. And global X uranium ETF breaking its sideways resistance line. Now, as your resistance line gets flatter and flatter, it means that you have a stronger, more pronounced breakout. So of these, uranium has the strongest breakout because it's a flat resistance line that it's breaking. Uselink says XLRE. All I can say is that we don't need this chart to go that much more north in order to break out. And this is the real estate select sector ready to break to the upside. I thought we were in this big real estate bear market that everyone and their mom on YouTube's talking about, and we were just going to crash. I don't know. To me, a lot of the home builders. I know this is the real estate select sector, but the home builders look really good. Makes me think that we're at the beginning of a very big bull market in real estate. Could we go down in the short term? Yes, but when rates come back down to a level that creates housing a little bit more affordable, I think the loaning is going to kick way back up, and these all break to the upside. Mike Simonson says Logan disagrees with me that the low transaction volume year is both a demand and supply story. Logan says it's only demand. Well, we had really low supply the past couple of years before that, and we had record transaction volumes. So I think it's probably more related to demand, and that demand is also related to the interest rate and the affordability. But the supply is what's keeping everything elevated in terms of pricing. So the volume of sales is demand, but the pricing in the homes is from supply. Charlie says the average price of a used car is on pace for a sixth consecutive monthly decline. It is not far from hitting a 2-year low. CPI should move down again in November. So here we are, used car index. I've been watching used cars, and they have come down quite a bit. There might be some good deals out there eventually, probably over the next year. Fewer U.S. existing homes are selling today than any point since 2010. The 3.8 million annual rate is even below the lowest level of sales during the 2020 COVID shutdowns of 4.01 million. That's crazy. But, I mean, I do think this is going to continue to go way up. You can also see almost an accumulation cylinder. 1, 2, 3, 4, 5, 6, 7, and then boom, all the way up to the moon. New college graduates are overestimating their starting salaries by $30,000 per CNBC. You know, I kind of knew where my starting salary would be working at some of these places, but what got me was you go, you work there, and then the pay increases are pretty weak. They usually give you like a 3% merit increase each year, and it's not really a lot of pay. You literally have to be there forever to get up into what I would consider to be a high-paying job. So what a lot of people do is they job hop. They move from job to job trying to get their pay increases doing it that way. Duran says, following the favorable inflation report last week, one thing seems clear. This Fed cycle is coming to an end. The main question now is how much the Fed will give back and how soon. The forward curve suggests 150 basis points by late 2025, and that's the interest rates coming back down. So the market is basically pricing that the interest rates are coming down over the next few years. Mike says Zellman is calling for home sales to stay low in 24 and 25. Connor sees home sales rebounding to close to 5 million. It strikes me that both of these takes will be accurate. So Zellman does great work, but I'll take the other side of this. Unemployment is low, homeowners are loaded with home equity, and the trend for sales is already inching higher. I bet we'll see daylight to 5 million sales by the end of next year. And remember, transaction volume is inflationary. A big deal. One possibility that I've been considering is what if our housing seasonality cycles have changed permanently post-pandemic? Maybe we simply have an April low, October high inventory cycle instead of January, August. For gold, we've got a long-term cup and handle about to break north. Could be a big move out of gold. Agree with that. We've got Gorian Rogenswag, copper market, despite concerns about the bullish outlook, We believe the tightening underlying fundamentals will boost copper prices in the next 6 to 12 months, providing investors with another opportunity to increase exposure. Okay. Bonds are now more volatile than gold for the first time in 40 plus years. Let that sink in. And gold's about to break to the upside. So that's crazy there. As I've been saying, the banking cartel is not going to be able to hold the suppression at $2,000. Today may be the day it breaks. If not today, it's going to happen soon. It's too early in the daily cycle, too many days for gold to beat on resistance. The cartel has no chance. Okay, so he thinks it's being manipulated and holding it down. IEA is head of the oil markets, even if OPEC plus oil production cuts are extended into 2024. We see a slight surplus in the global market balance. IEA's head of the oil markets, we are in a deficit now, and all stocks are drawing at a fast rate. We have two kind of opposing market viewpoints here, but they're both from the IEA's head of the oil markets. Gold is back above 2,000. The next move for the metal is to break out from a triple top formation. Precious metals have never been this close to a third cycle. If so, two important assets are poised to become major beneficiaries. Silver with historically high 83 to gold to silver ratio. They overlook underappreciated and unloved mining industry, currently valued at a fraction of its historical valuations. So we've got silver as an opportunity and the miners, which are priced very cheaply. TLT is the bottom in for the bond market. I don't know about that. We'll see. We'll see where it goes over the next few days, trading days. U.S. Treasuries have roared back over the last 2 months to almost completely wipe out losses sustained in 2023 and perhaps avoid falling 3 consecutive years for the first time in the history of the United States. So they are coming on back, and maybe it can turn positive. It will if interest rates do fall. Bond prices will go up. Jason says, interesting to look back and compare the past month's action to that of the SPX in the late 1982. When inflation peaked and the stock market rocketed higher in 1983. It erased 2 years of downside in just 3 short months as the SPX went from that to that. I don't think we're anywhere close to 82 or 83. We are at 1970. We're not coming back, guys. I mean, maybe we get one last peak, but the market conditions are not like 82, 83. 82, 83, that was the end of the interest rate hikes. And it was starting to go down. They were lowering interest rates for a very long time. I think that we're just starting to go up in interest rates. We'll come back with a bull trap for stocks, a bear trap for commodities perhaps, when interest rates go down in the short term here. Then I think they'll go higher because we've got all the inflation coming from the real estate market. If we start making more and more loans against new homes. That's my take there. Platinum heading back to the mean as more expensive than palladium. Nice handful year bull for palladium late 2010s, early 2020s. Thanks to Volkswagen Dieselgate, supply shortage, and surely NYMEX Momo pile longs. So if you look, we're coming just up above 1 in the platinum to palladium ratio again. Or coming back down, and I think that will continue where platinum will outperform palladium. But I do think they'll both go up together. I really do. Go platinum. Take a long, hard look at this chart. Why? Because it's your ticket out of the rat race. Huge asset paradigm shift towards hard assets is here. Fortunes will be made. Historical opportunity. Do not miss. So here's the first Majestic and NVIDIA. It's broken to the downside. Very probable false breakout. And then we'll do, hopefully, an expected around the apex move up. The zone term. So First Majestic will eventually outperform NVIDIA, according to Grady. Copper, logarithmic. This is a false breakout at the apex. Copper's in for a huge run. Yeah, here we go, copper. It's going to start ripping here. Let's get moving. YCA, no doubt we're in a multi-year bull market for yellow cake. Just continuing to rip higher there. Got a big breakout in SPUT. moved big as expected. Hugely bullish chart, big picture. Uranium miners did 580% in its baby bull move. Now SPUT is a rising wedge on the daily. So let's rip this thing, guys. Here's CCJ to the M2 money supply. We have a long way to go higher, guys. Get ready. Be patient. There's growing narrative framing the news of the elected president, Javier Milei or whatever. It's positive for Argentina, but negative for Brazil and neighboring countries. I strongly disagree. Look at this chart here, guys. Latin American stocks versus the S&P 500 index. It is so low. And we have such a huge upside potential in this. God, that looks so good. I'm in it. I'm in it, boys. I'm in it. And that's where I started last time. So we'll end it there, guys. But that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. And we do have a discount going on, Turkey, if you're interested. Check it out. Description link below. Don't forget to give me the thumb up. Help me out. And we'll catch you guys later. This is Finding Value.